Per usual, this channel is for educational purposes only and is not intended as financial advice. It is Macro Monday. Let's take a look at some legacy charts, starting with crypto global ETPs from James here at CoinShares, bringing in $1 billion last week. Total AUM reaching a record high of $188 billion. Most of this, of course, again, being on the Bitcoin side. A decent slug here from ETH. Everything else in the backseat for the moment, mostly because anything outside of Bitcoin and Ethereum isn't really available in the US yet on the ETF side. Globally, it's, of course, again, all US dominated here. That's why everyone wants US products. We have a culture of investment. We have a culture of trading / degeneracy that globally tends to be unmatched. So to get this listed in the United States for any product is at the very top of the list. Last week, we also had additional draft guidance of a framework. And keep in mind, any discussions are great for future outcomes. It's better than the cold shoulder. Cold shoulder is the worst case scenario where the SEC just doesn't engage at all. And that's not what they're doing here. As this story points out, SEC is in active discussions with issuers and exchanges on what the framework will look like. 12-page document, pretty in-depth. And that would include things like staking and in-kind creates and redeems. And from a tax perspective, in-kind creates and redeems probably mean that all of the flows go to the lowest fee or the best relationship. So for example, if you have GBTC and you're paying 10x the fee of any other ETF and you don't take a tax hit, whereas you previously would, then we're going to see some very interesting movements around in the ETF land. But we're also going to see movements from crypto holders wanting to bring their assets into legacy rails for whatever reason. Easier for proof of income statements, easier for borrowing. We're just going to continue to see crypto and TradFi and legacy all just merge together. And that may not be the Satoshi's vision of Bitcoin, but this is what you get for a maturation of an asset. If you don't want this, then you're not going to see higher prices because you're not going to have more money in the ecosystem. That's just the way it is. So in any event, all this is very good news for future crypto products in the United States. We also had a story, SEC asking issuers to amend and refile SOL applications by the end of July. So again, this is more engagement, more discussion from the SEC, and historically has meant these products are coming to market eventually, probably at latest by year end. And we can look at the list from another James at Bloomberg Intelligence, listing the odds of approvals here of various products. So they're pretty confident at Bloomberg that we're going to see many of these ETFs come to market fairly shortly here after the framework is complete. GDLC also was approved last week for a conversion, but is not trading yet again until we see a framework finalized from the SEC. For BTC, for legacy, the general story today has been a tariff tantrum. Trump sending letters to 2 nations as well as a slew of other countries receiving their potential final, maybe possibly tariff level that could take effect between August and who knows when, right? There's a lot of uncertainty and all that. Market doesn't like that information. Still look fine here. We're still consolidating at all-time highs. Any new lower lows below 105 certainly would be more troubling than what we're seeing here. And of course, anything inside of the daily cloud isn't what you want to see. As I said last night, we have a bearish TK cross here on the cloud. So the cloud is telling you, get out of your longs here. And I'm telling myself, that I'm adding to my longs. I bought more MSTR today. I like a little leverage here. I like to, look, you got to shoot your shot. And we're coming up on potentially a trade for the quarter here already at all-time highs. So I'm happy to be wrong up here if I'm wrong. But if I'm right, I don't want to be sized incorrectly. We talked about cup and handle last night. That's everywhere. I don't think that's a secret. There's also a flag here. That's not a secret. We'll look at the Rocket Lab chart. That has made a new higher high today, a new all-time high today. That could be more anti-Elon than anything, but that chart looks very similar. And we can actually pull it up on Kraken. Looks very similar to BTC. Similar price structure, similar cup and handle dynamics, and hopefully a similar breakout here. And this is consolidated in a similar time frame as well. So very similar charts. And the same can be said for Dell and ETH, which we'll take a look again later, but Dell pulling up out of its consolidation hell that it was in for a month, still seeing higher highs there, whereas ETH is in waiting mode for the moment. So if I'm looking for reasons to be bullish and to maintain my religion here, it's looking at everything else, seeing everything else break up. IWM is another one we'll take a look at. It's going to be harder and harder for crypto to just do nothing if everything else is pulling up. We had the dollar pull up a little bit today. That has also dragged risk lower. We had the 10-year pull up a little bit today. That has pulled risk lower. So those are the two ends of the seesaw. Crypto and other risk assets versus the dollar and yields. For the most part, though, crypto not really doing too much today, plus or minus 5%. That's Monday, right? That's any given day. Sol still in a waiting pattern as well to get above the cloud. Here's the headline from Reuters setting the Japan and South Korea tariffs at 25%. There's also a headline about EU not receiving additional tariffs. So again, it's just more uncertainty. We were at all-time highs. People were too excited, too happy on the legacy side of things, and they just need a reason to make everybody upset again. So here we go, back through the ringer. It's not like this was an unknown. It's just endless and continuous without any finalization. Make the level and get on with it. But that's where all this taco stuff comes from. Looking at the calendar for the week, Fed minutes Wednesday, some Fed speak, kind of a light week overall. And I don't think next week we get CPI and PPI, retail sales, housing. So a little bit more excitement next week on the CPI front. But this week, fairly muted, not too much going on with the events. On the CME FedWatch tool here on probabilities, we have fully effectively priced out a cut in July. There is no meeting in August. That is Jackson Hole. So the soonest at this point we could see a cut would be September. A cut got pushed back because unemployment was below expectations at 4.1%. And we're probably going to get a CPI print next week that is slightly hotter than expectations. So it's going to further just push these odds to September if we see anything at all. And if the Fed still thinks we're going to get 2 rate cuts by the end of the year, that only leaves 3 more meetings to get in 2 cuts. We also, of course, have Powell gone by early next year. And then the market's going to start pricing that in as well. If Trump gets angry on July 30th, the end of the month, and says, hey, here's my new Fed guy. Here's what he's going to do when he comes into town and cleans up this mess or whatever he, truths, then that's going to shift this curve a lot too, because that's going to change future expectations for where rates are going to be. The good news on the trueflation front, this had started to tick up and has ticked way down again. This is services and goods, not to an equal weighting, but it's a good sign that we're not seeing runaway inflation. Some of this is, of course, tariff related. Some of this is front-running tariffs, and it's hard to know what exactly is going on with the tariffs. Some of them are in effect already, right? So is that getting baked in here or not? It looks like probably. So we'll see where this ends up at the end of the year. Who knows if any of these tariffs actually get put into effect or not. But to see this come down suggests that we will see a lower CPI print for July on next month's print than we will for next week's print from June, which is going to be a higher CPI. Hopefully that's baked in. Hopefully people understand the expectations there and aren't going to get caught off sides by a higher number. PCE a little more muted still. We're only 7 days into July here, but these look to be leveling off and inching lower, which is a good sign. We also have GDP. We had a print on July 3rd at 2.6, the next print on July 9. So again, this is not recession. Sorry, for all the recessionistas out there. We're not going to get a recession until you get 2 back-to-back quarters at least of negative GDP. And last I checked, 2.6 is not negative. Here's the dollar. Last night I said, if there's anything to be bearish about, it would be this potential bull div falling wedge situation on technicals for the dollar. Definitely not something we want to see breaking up with BTC at all-time highs, getting ready to break out. It also looks like gold and BTC are sort of waiting for a catalyst one way or the other, or waiting for the other one to move before they decide to move. BTC has been consolidating longer than gold. We'll take a look at that, but all this in conjunction, we don't want gold breaking up. We don't want the dollar breaking up. That brings rain on our parade on the crypto side. Here's the 10-year. Still in a tight consolidation, not quite beating the inverted head and shoulders allegations here. And again, this goes back to we don't want to live at 4 3/4. Anything above 5, and that is intervention territory. That is yield curve control, QE territory. And anything below 4, is game on. So we don't want to be in this weird spot where we're breaking up on the 10-year and we're pre-intervention. That is turbo bearish. So still no resolution on the 10-year. And if we zoom way out, and if you didn't know what this is just on technicals, you'd say, wow, that might be a pretty bullish continuation there. Now it's gone from shades of sort of head and shoulders to pennant to inverted head and shoulders on lower time frames, but it's still in consolidation wait and see mode. And it's going to be very interesting if Trump brings in a turbo dove on rates even before they're actually brought in like as a shadow Fed roll, and what happens with the 10-year. Is the shadow Fed governor going to force the Fed and Treasury into yield curve control interventions with their statements? We'll see. Trump says he wants rates way, way down on the short end. So definitely a story to keep in mind the rest of the year. 10-2 curve here still on its way to uninverting. There's the unemployment rate at the bottom, still at a historically low level, which gives the Fed ammo to say, okay, we don't need to cut. And that's a data point justification that makes sense. We'll see if it pays off or not, as long as Powell is around. But if you were to ask AI, what would you do here based on this data with inflation not yet to 2% and unemployment where it is, AI would probably say, leave rates where they are. You would need to feed it ancillary data to justify why rates need to come down with markets at all-time highs and the unemployment rate where it is. Here's oil. For someone who kept asking me in the comments, I really don't have anything to say. It's still bearish. I can't imagine trading oil for a living. And something to think about in 2026, if we get yields that are runaway, again, there's this very weird spot between 4 3/4 and 5 where we don't want to live. But for 2026, if oil breaks out on the weekly like it did in 2020, which was really growth recovery, which I can't see necessarily happening in 2026. But if that's the case, add that to the list of things to be bearish about in 2026. If you're bullish crypto, you do not want oil breaking up in 2026. You do not want this forming an inverted head and shoulders into 2026. But it's definitely something to continue to watch for. And will be very interesting if that lines up with the 4-year cycle, if oil breaks up for whatever reason. Here's gas prices in the US. Still fairly muted. Not really much going on here. Kind of flatlining at around 3.25, 3.10 the entire year. And we're almost past the seasonal uptick. You can see there's some winter seasonal uptick here. But it's hard to imagine, even with all the geopolitical stuff that's going on, what else could push gas prices way above what we've already seen. Here's gold consolidating since April. Kind of a mess, but nothing's bearish yet. Still just waiting for a reason to make higher highs, I guess. Not a clean read at this point anymore on technicals, but nothing bearish. You can't really draw anything bearish, at least in my eyes, that would pull this down. So as long as it's above the cloud, it's still fair game for bullish continuation. Maybe you get more bang for your buck in other commodities and other miners. This is GDX. Looks like it still has some room to run. Gold miner ETF. Platinum and palladium broke out a couple weeks ago now after a multi-year consolidation. Certainly looks like a fresh trend that has some room to run. You've got uranium, which also looks, this certainly has plenty of room to run, kind of reminiscent of the coin chart, which we'll look at in a second with this massive broadening wedge breakout. Definitely has bullish tailwinds, bullish narrative, bullish regulatory events happening in the US. And on to equities here. We still look fine on the SPY. We have not tripped a trailing stop loss since around 595 back here. Still above the Tenkin, the blue line, this whole time. How much more do you really want is the question. Just like the dollar has a falling wedge with the bull div, this has a rising wedge with the bear div. You'll also still have this TK separation. I'd imagine it's going to take a little bit more consolidation, a la BTC, even similar back here, what we had coming into 2025. A little bit more consolidation to push this further, but it's definitely not bearish. Doesn't look at major risk of reversal up here just yet. It's just how much more do you want from the bottom, right? From 480 to 620. Quite a move. The Qs, similar story. They have a little bit left in the measured move, certainly. Nothing to get too worried about here. And you don't have another stop loss fractal until 520. And this was what the Qs look like going into the year. Tons of consolidation before that breakup. So things look fine here. There's nothing to be super, super concerned about. And just as a reminder, especially thinking about the Bitcoin cup and handle, this was the cues in 22 to 2025. This was a huge pattern, cup and handle, flag, whatever you want to think of it as. You can see the entry points that made the most sense back here on the daily cloud, breaking the diag. You got a re-entry here on the cloud breakout, and then a final ideal entry at resistance horizontally there. And we eventually hit the level. It just took a very long time. It took a year, which is fine, but the level was the level based on the depth of the drawdown. You also have some active stuff on the MAGS ETF, Tesla today, obviously breaking down quite a bit. Still a little bit of room to run. It's just, is this an entry here today? No. Buy, sell, or hold. It's a hold until you get another trailing stop loss there. Doesn't look like the strongest of buys, just based on how much it's already moved. You have the IGV tech sector ETF, which continues to do very well, continues to have an active cup and handle target from 2024, where it didn't quite get there, pulled back above high time frame clouds again. Still plenty of room on that one. So there's other stuff that's in the tech ecosphere that is not the Qs, that is not the MAG 7. On the ETF front, here's Hack. That is certainly an option. This has less room to run to me than IGV, but same deal. Cup and handle here. And we, of course, had SMH, which had a cup and handle before its target was reached in 2024. Here's the IHS for SMH that is active. And at this point, again, it's like buy, sell, or hold. You're certainly probably selling more than you're buying, or holding more than you're buying. It's hard to justify, I think, to me, a fresh entry up here, because just like everything else, you're getting elements of a rising wedge, elements of a bear div, and you're hitting the targets. Yes, there's a little bit of room here, but where were you in May, right, when we broke out? That's always the ideal entry. Does it always work out? No. Sometimes you get months of chop, but the best entries are always after recoveries like this, after a full reset of the cloud. So up here, I don't really see much for me in SMH territory. I did pull the trigger on an AMD stop loss today. I think it was up, my position was up 18% or so. So even on some of the laggards for the strength industries, we're starting to see decent pullbacks. Maybe this was tariff related, I don't know, but it is what it is on technicals. Didn't quite reach the target, but got pretty close. And still plenty of room to run. This may continue, this may stop here and, have a mega bounce tomorrow. But this is what I used to buy more MSTR today. IWM, I think, still has plenty of room to run. So if I had to choose anything that I've talked to up until this point, it would be something in commodity land or something in low cap land. If I think we're going to see continuation here, I think high caps are going to continue to struggle a little bit, and there's going to be a little bit more churn just because they've corrected in a bullish fashion so sharply. Stop loss on this is still below neckline, and we're still above the cloud. So plenty of room there left on IWM. Of all the MAG 7, there's Apple, which is looking like it's about to potentially break out of the cloud on the daily. There's everything else, which is sort of at all-time highs, just pushing. Microsoft, Meta, Netflix, Nvidia, and you've got Tesla, right? This is what's dragging down most of the indices that it's in, because you've got Elon Musk playing Ross Perot, creating a new political party, which, hey, good for him. That's his right. But he also has to realize he's got his finger in a lot of pies, and that includes Tesla. So on technicals, aside from everything else, this continues to look like not the place to be. And I wouldn't want to be in any ETF that is holding Tesla. Downside risk is still back to 2025 lows. Call this the weeping willow, M double top, whatever you want to call it. As long as it looks like this, it just doesn't make sense to me. There's plenty of other stuff that's already working, plenty of other stuff that's ready to break out. Yet I still see people day in and day out just throwing money at Tesla. Fine. That's not necessarily a short-term idea. That's a longer-term idea. But in the short term, I still think you could get better entries than what we're seeing here. So it just doesn't make sense to me at all. Here's Rocket Lab again relative to BTC. This is the BTC chart effectively. You get a little couple of handle action that broke out, and it's in the anti-Elon portfolio, the anti-SpaceX portfolio. The idea there being, if there's a political logjam based on Trump and Elon being in different political parties now, then anything else is going to benefit, right? That's the idea. So still plenty of room here just on the measured move, and this is in price discovery. So I like ads, I like dollar cost averaging, I like everything here. And you can throw on Williams fractals and you're probably going to get a Williams fractal entry today on this, but this continues to look very good. You've got Dell versus ETH again, which I talked about. Looks great. Looks like continuation. Another place to be that is not ultra mega cap tech. You can throw SMCI in there as well, as long as it's above the cloud. Here's Uber, also in the anti-Elon portfolio. Uber and Tesla tend to trade opposite. And you're seeing price discovery, bullish continuation after a year and a half of consolidation here on Uber. So this also looks very, very good relative to Tesla. That's just sort of doing a bunch of nothing, swirling in the drain there. Not much changed on MSTR today. Closed slightly below 400. Looks fine. Bollinger Band's expanding to the upside. Certainly don't want any new lower lows. Anything below 375 is probably not where you want to be. Anything below 350, certainly not where you want to be. But until this breaks down, the probability for me is bullish continuation. Waiting on BTC, waiting on a few other things, sure. But looks like a great chance to take a trade here. And if not here, when? It would be back here at 450. But at this point, we've been consolidating on MSTR for at least 8 months, similar to BTC. Here's Coin, thinking about that uranium chart. Similar concept and idea here. If this is pre-breakout, I've seen some people draw this whole chart since IPO as sort of a cup and handle. Fine. You could probably fashion a cup and handle out of this. None of this stuff is bearish, right? So as long as you can maintain price levels above, let's say, the midpoint of this, which is probably 225, you're probably good to go. And if you're bullish alts, you're bullish coin, because alts and coin trade essentially the same. This was Circle. I still don't know where this fits in the risk on, risk off continuum. If the market is trading Circle as a risk on crypto company or as a risk off stablecoin company, Genius Act should be bullish for this. How much is that is priced in? Rates coming down should be bearish for Circle because then they make less money. Is the Genius Act potential future issuance of USDC going to offset rates? Lots of questions to think about. Lower timeframes do appear to be recovering, and Circle and Coin have tended to trade opposite on the day. I don't think that was necessarily the case today, but something else to trade and think about now that this has pulled back quite a bit from 300% or whatever it was in a month. And lastly, on the miners broadly, Marathon, anything above freshly the cloud looks fine to me as an open or an add, definitely a buy. Core's dropped a bunch today on the news that the CoreWeave acquisition would come in around $20 a share. Iron's still holding up well. So a lot of just random dispersion. You've got miners selling BTC to buy ETH, all sorts of stuff going on with the miners. But from a technical perspective, WGMI still looks fine. Most of the miners still above the cloud or about to be above the cloud. And that's really where you want to be from a technical perspective. So you've got BTC, ETH, Sol, you've got MSTR, BITU, MSTU, leverage on that stuff. You've got WGMI. Lots of options to think about here as BTC consolidates very near all-time highs, to just 3% below all-time highs. That's all I got for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.